So, today we need to talk about something that honestly sounds almost unbelievable when you first hear it. Because if I told most people a few years ago that the United States government could one day explore giving crypto connected firms direct access to the Federal Reserve System itself, people would have laughed at you. Crypto was supposed to be the outsider, the rebel industry, the thing governments hated, the thing banks wanted nothing to do with. And yet now, in 2026, we're suddenly having a very serious conversation about whether firms like Ripple, Kraken, and Anchorage could potentially connect directly into the core plumbing of the US financial system. Not through a bank, not through a middleman, but potentially through Federal Reserve infrastructure itself. And if that sounds boring on the surface, I actually think this could become one of the most important crypto stories of the entire cycle. Because this isn't really about hype. This isn't even really about XRP specifically. It's about something much bigger. It's about who controls the rails of money in the future. Because right now, most people still think crypto adoption means prices going up. They think adoption means your favourite coin pumps 300% and suddenly everybody starts using it overnight. But that's probably not what real adoption looks like. Real adoption usually happens quietly, underneath the surface, inside infrastructure, inside systems people use every day without even realising blockchain technology is involved. And that's why this story matters so much. Because what's happening right now feels less like crypto fighting the financial system and more like crypto slowly merging into it. Right, if you're new here, welcome back to the channel. I'm Paula, and on this channel, we go beyond the headlines to look at what's really happening in crypto, finance, global markets, and the future of money. Because honestly, most people only see the surface level of these stories. They see price movements, hype, and social media narratives. But underneath all of that, there's a much bigger shift happening in real time. Governments are changing regulations, institutions are changing how money moves, AI is beginning to merge with finance, and blockchain technology is slowly integrating into systems most people use every day without even realizing it. So, whether you're completely new to crypto or you've been here for years, the goal of this channel is simple: to help you understand how all of these pieces connect together without the nonsense, without the fake hype, and without pretending that any of us know exactly what happens next. Now, before we go further, I do need to say this clearly because social media is already turning into absolute chaos. There's already posts everywhere claiming XRP is replacing Swift, that Ripple is secretly partnering with the Federal Reserve, that the dollar is moving entirely onto blockchain tomorrow morning, and honestly, none of that has been confirmed. There's no official announcement saying Ripple has direct Fed access. There's no evidence XRP is becoming the reserve currency. And there's no confirmation that crypto firms are suddenly replacing banks entirely. But there are real developments happening here, and they are important. Reuters reported this week that President Trump signed executive orders focused on fintech innovation, banking reform, and digital financial infrastructure. One of the key parts of those orders reportedly asked the Federal Reserve to review how crypto firms and non bank financial institutions could potentially gain broader access to wholesale payment systems and so called master accounts. And this is where people suddenly start getting confused because the terminology sounds technical and boring. But honestly, this is the bit that matters most. A Federal Reserve Master Account is basically direct access to the Fed's payment infrastructure. Normally, if a crypto exchange or fintech company wants to move dollars around the financial system, they still rely heavily on traditional banks acting as intermediaries. That means delays, fees, restrictions, settlement risk, bank independency, and regulatory bottlenecks. Banks still control the rails. But if certain crypto native institutions gain direct access to systems like Fedwire, the entire dynamic changes. They're no longer sitting outside the financial system trying to connect into it. They become part of the system itself. And this is not completely theoretical anymore either. Reuters also confirmed earlier this year that Kraken had already secured a limited Federal Reserve payment account structure through Wyoming's SPDI banking framework. Again, not a full mainstream integration yet, but the point is the wall has already started opening. And that is the key thing that most people are missing. The conversation itself has changed. A few years ago, regulators were still debating whether crypto should even exist. Now the discussion is, how deeply should crypto firms be integrated into the financial system? That is a completely different level of conversation. And honestly, I think this connects to a much bigger macro shift that's happening globally right now. Because governments are starting to realise something incredibly important. Blockchain technology does not necessarily weaken national currencies. In some cases, it may actually strengthen them. And that sounds completely backwards compared to how crypto was originally positioned. But think about what governments actually care about. They care about control of settlement, control of liquidity, control of payment infrastructure, control of global financial influence. The US dollar's dominance doesn't just come from people liking dollars, it comes from infrastructure, Fedwire, treasury markets, correspondent banking, dollar settlement systems, SWIFT connectivity, global liquidity networks. That's where the real power lives. And what's fascinating is that stablecoins may actually reinforce that power rather than destroy it. This is why Trump's earlier executive orders around digital finance were so important, because they specifically focused on supporting dollar backed stablecoins while opposing central bank digital currencies. Now, that matters massively because it tells you that the US may not be trying to stop digital finance anymore. It may be trying to absorb it before somebody else does. And suddenly, when you start looking at the global landscape, things start connecting together in a way most retail traders never really think about it. China is pushing digital payment infrastructure aggressively. Europe is exploring the digital euro. Tokenisation is accelerating globally. Banks are experimenting with blockchain settlement. BlackRock is tokenizing funds. Stablecoins are exploding in usage. AI systems are beginning to require programmable money systems. Cross border settlement is becoming a geopolitical issue. And now the United States is potentially looking at integrating crypto native firms directly into Federal Reserve infrastructure. That's not random, that feels strategic. If the future financial system becomes programmable, tokenized, and always online, the US wants a dollar at the center of it. And this is where Ripple becomes interesting again. Now, listen carefully because I want to stay very factual here. Ripple has spent years positioning itself differently from most crypto companies. While large parts of crypto pushed anti bank narratives, Ripple consistently focused on compliance, cross border payments, financial partnerships, and institutional integration. Whether people like XRP or not, that positioning suddenly looks very relevant in this environment. Ripple previously participated in the Federal Reserve's Faster Payment Task Force years ago. The company has continued pushing payment infrastructure narratives, liquidity solutions, and institutional settlement products. And importantly, Ripple's entire pitch has never really been destroy the banking system. Their pitch has been improve the plumbing. And that distinction matters enormously now. Because what we may be entering is not a phase where crypto replaces finance, but a phase where crypto becomes part of finance. And honestly, I think this is where retail investors often feel disconnected from the industry. Because online, crypto still gets presented like a casino most of the time. Candles, leverage, meme coins, 100x gains, influencers screaming at charts. But behind the scenes, there's this completely different conversation happening around infrastructure, settlement, liquidity, and digital financial architecture. And the average person understandably struggles to connect it because they're thinking, okay, but how does any of this actually affect me? And that is an important question Because if this trend continues, the average person may eventually interact with blockchain systems every single day without even knowing it. Faster international payments, cheaper transfers, instant settlement, 24/7 financial systems, tokenized assets, programmable transactions, AI powered financial automation, reduced friction between banks globally. The technology slowly disappears into the background while the experience improves, just like the internet did. Most people didn't wake up one morning saying the internet has officially arrived. It slowly integrated into everything: shopping, banking, communication, entertainment, work. And eventually, people stopped talking about internet companies because the internet became part of normal life. I honestly think blockchain may be heading down a similar path. Not through one dramatic moment, but through gradual integration into financial infrastructure. Now, of course, there are risks here too. Traditional banking groups are already pushing back heavily against these proposals. Reuters reported concerns around money laundering risks, cyber threats, operational vulnerabilities, and financial stability. Some of those concerns are valid. Because if non banking firms eventually gain deeper access to Federal Reserve systems, it could fundamentally alter how liquidity flows through the banking systems. Banks do not want to lose control of deposits. They do not want fintech firms bypassing them. And they definitely do not want crypto native institutions becoming legitimate competitors inside the core financial infrastructure itself. Because again, infrastructure is where the real power lives, not apps, not branding, not social media narratives, the rails. And this is why I think this story is so much bigger than people realise. Because underneath all the headlines, what we're actually watching is a battle over the future architecture of money movement. Who settles transactions? Who controls liquidity? Who owns payment rails? Who facilitates global transfers? Who connects institutions together? That's the real game. When you zoom out far enough, the crypto industry starts looking less like an outsider revolution and more like the next layer of financial evolution. Now, before we continue, if you enjoy these deeper macro conversations around crypto, finance, and where all of this could be heading long term, don't forget to check out the UK Crypto Podcast hosted by me and Milkshake Matty. New episodes go live every Friday at 7 p.m. UK time, right here on YouTube. You can also find us over on Spotify and TikTok as well. We go much deeper into a lot of these stories, the psychology behind the markets, and the bigger shifts happening underneath the surface that most people completely miss. I think one of the biggest mistakes people make in crypto is focusing only on price. Price matters, obviously, but structure matters more. And what's happening structurally right now is fascinating. You've got governments trying to modernise payment systems. You've got institutions demanding faster settlement. You've got stablecoins becoming systematically important. You've got tokenisation accelerating. You've got AI potentially requiring machine to machine payment systems. And you've got regulators slowly moving from hostility towards integration. That is a huge shift. And it also changes how we think about crypto winners moving forward, because historically, crypto cycles were mostly driven by speculation, narratives, hype, retail excitement, liquidity flooding into everything equally. But as the market matures, money becomes more selective. The market starts asking tougher questions. Who has real infrastructure? Who has regulatory positioning? Who integrates with existing systems? Who survives institutional scrutiny? Who actually benefits if finance becomes more tokenized? And whether people like it or not, those questions naturally push attention towards projects connected to real world financial infrastructure that doesn't guarantee success. It doesn't guarantee price performance, and it definitely doesn't mean every institutional narrative suddenly becomes reality. But it does mean the market is evolving. And personally, I think that's one of the reasons crypto feels so strange to people right now. We're in this weird transition phase where the old speculative market still exists, while the new infrastructure market is slowly emerging underneath it. That's why you see divergence now. Some projects pump purely on attention. Some projects quietly build infrastructure. Some projects survive because of community strength, and others position themselves around future financial systems. The market is becoming layered. Because if governments really are beginning to integrate blockchain infrastructure into the core financial system, this is no longer a niche industry anymore. It becomes about the future design of money itself. And that is why this Federal Reserve conversation matters so much. Not because XRP replaces banks overnight, not because crypto suddenly takes over the world tomorrow morning, but because for the first time we're seeing serious discussions around crypto native institutions potentially plugging directly into the machinery of the US financial system itself. And once these conversations begin, it becomes very difficult to put the technology back in the box. Anyway, guys, let me know what you think down in the comments below. Do you think this is a genuine financial evolution? Or do you think crypto risks losing its original purpose by becoming integrated into the system it was originally trying to disrupt? And as always, if you want to know the exact strategies we use in the Crypto Wolf Pack to make money in both the bull market and the bear market, we've made a completely free course for you. The link is in the description below. If you enjoyed the video, don't forget to like, subscribe. Thank you so much for watching, and I'll see you in the next one.